Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalysts talk. Today we're looking at strategy.
If you find our talks useful, please consider subscribe, like, and comment underneath to support our podcast. And if there's any stock you want us to look into, leave it in the comments section below.
So let's get into the analysis.
Okay, let's unpack this one. Strategy is, well, it's a fascinating company. It's almost like it's running two completely different businesses under one roof.
That's exactly right. You have this foundational software intelligence business, which is a real cash generator.
And then you have the elephant in the room.
The massive Bitcoin treasury. And our job today is to really figure out how these two pieces fit together. For you, the listener, it's key to understand how that strong legacy software, how it underpins what is essentially a highly leveraged bet on crypto.
So let's start with that foundation. How strong is the software side of the business right now?
If you strip away all the crypto noise for a second, the core business is exceptionally strong. We've been digging into the Q3 2025 results, and the performance was, well, it was robust.
Okay.
Revenue came in at nearly $600 million for the quarter, so you're seeing that organic growth. But the real story, I think, is in the margins.
Which were rock solid, right?
Absolutely. Their gross profit margin held steady at about 70.5%. That kind of consistent profitability shows they can run that segment, very efficiently.
And that stability is what lets them take these bigger swings.
Precisely. And those swings led to just a massive financial turnaround compared to last year.
How massive are we talking?
I mean, it's dramatic. If you look at operating income, it swung from a loss last year to a profit of $3.9 billion.
Wow.
And that leverage went straight to the bottom line. Diluted EPS, earnings per share, hit $8.42 for the quarter.
So strong quarter, profitable, steady.
Mm-hmm.
And when you connect that to the stock's valuation, that profitability makes the PE ratio look, well, pretty low. It's sitting at 6.24.
Yeah, exactly. And a low PE like that often suggests, that the stock is earning a lot relative to its current price. But,
yeah,
and this is a big but, here's where it gets really interesting.
Okay.
The company isn't just being valued on that Q3 performance. We have to look at their forward guidance. This is where the whole thesis just explodes.
Right. Management's guidance for the full year 2025 is, it's incredibly aggressive. They're projecting operating income around $34 billion.
And diluted EPS hitting an astonishing $80.
So what's the assumption powering that $80 number?
Well, that assumption is the entire story. Strategy has explicitly pegged those projections to the belief that Bitcoin will reach $150,000 by year end.
That's not some vague target then. It's a direct calculation.
It's completely direct. So when you buy this stock, you're buying a highly profitable software company whose entire valuation structure is basically acting as a high leverage call option on the crypto market.
Which brings us to their competitive moat. I mean, if they're mainly a Bitcoin proxy, why do big institutions go to Strategy instead of just, buying an ETF?
The advantage is pure scale. I mean, nobody comes close. They hold an enormous treasury, 640,250 Bitcoin.
Which is valued around, what, $79 billion?
Around $79 billion, yeah. It makes them the definitive leveraged proxy in the market. And they're not just holding it, they're actively managing this, achieving an impressive 26% BTC yield so far this year.
And they keep accumulating more without selling their existing holdings, which that seems like a real financial tightrope act. How are they pulling that off?
They've just been masters of sophisticated capital raises, mostly through these preferred equity offerings.
We saw that huge raise back in July.
Over $2.5 billion through their STRC preferred offering, and then another one, a substantial haul of 620 million euros via the STRE offering in November.
And let's just clarify that for the listener. When we say STRC and STRE, we're talking about preferred stock. So it's a different class of equity. It's kind of like debt, but it's still equity.
Exactly. It's high-level financial engineering. And they showed how confident they were in October when they actually increased the dividend rate on that STRC stock from 10.25% to 10.5%.
That's a pretty strong signal. But with all this capital issuance, how does management stop from diluting the common shareholders over time?
So they've set up this strategic guardrail. They call it MNAV, or Modified Net Asset Value.
And what does that do?
It basically acts as a trigger. They use these MNAV multiples to decide when it's a good time to issue common stock. So they wait for these high valuation windows to prevent, unnecessary dilution.
That's smart. And what about protecting against the downside? They set up a huge cash reserve recently, didn't they?
Yes, in November. A massive $1.44 billion cash reserve.
Hmm?
This is a critical defensive move. It's designed specifically to cover debt and other costs without ever having to liquidate any of their Bitcoin.
Non-liquidation mode.
That's a perfect way to put it. It's a huge psychological and financial buffer.
Okay, let's pivot from the balance sheet to the chart. This stock is famous for its massive swings. The beta is 3.37, which is just huge.
Oh, yeah. It moves about 3 times as much as the overall market, but despite those daily swings, the long-term trend has been fundamentally bullish.
You see that pattern of higher lows and higher highs?
You do, yeah. If you look at the chart since July, it's very clear. And crucially, the stock price has held above both its 50-day and 200-day moving averages. That's a textbook upward trend.
So for you, the listener, the volatility is part of the package, but the direction has been consistently up. Where are the key levels we should be watching right now?
Okay, so support is really firmly established in that $166 to $180 range. It's been tested, and it's held up.
And on the upside?
The near-term breakout point, the resistance, is between 290 and 310. If it can clear that, we start looking toward those prior highs again, and the 12-month high was way up around $543.
Which just shows you the potential for explosive movement.
It really does.
Now, what about market flow? We saw something interesting happen recently with short sellers.
We did. A very prominent short seller announced they'd closed their position in late November.
And that's called short seller capitulation, right?
Right. When the major bears give up, it often signals a cleansing of that negative pressure and you get a bounce. And beyond that, the technical indicators are confirming this shift.
So what are things like the RSI and MSTR telling us?
The readings are healthy, but more importantly, we're seeing what technical analysts call hidden bullish divergence after the recent price drops.
Okay, break that down for us. What does that mean in simple terms?
It means that while the stock price was hitting lower lows, the underlying momentum indicators weren't confirming that weakness. That hidden divergence suggests selling pressure is getting a lot weaker, and it sets the stage for a potential reversal to the upside.
Okay, that sets us up perfectly for the catalysts. The technical floor seems strong. What's on the calendar that could drive the stock past that 310 resistance?
Well, the next 90 days are just packed with potential triggers. The big one is the Q4 earnings report on February 5th.
That will be the first real test of that $80 EPS guidance.
Exactly. And before that, we have the December Investor Day. We're expecting major product announcements there, focused on next-gen analytics and AI functionalities.
So they're showing the legacy business is still innovating.
Right, which strengthens that foundational story. It gives fundamental investors another reason to hold, regardless of what Bitcoin does.
The capital structure itself also has some key dates.
It does. The first SDE preferred dividend starts on December 31st. Then in January, you have the expected ETF rebalancing, which could drive some serious institutional inflows into a name like this.
And we can't forget about that $1.44 billion in cash.
That cash is a massive piece of dry powder. An announcement about deploying that for, say, an acquisition would create an immediate upside surprise.
And then there's always the speculative buzz that seems to follow this company everywhere.
The rumors are always there, aren't they? You hear talk about a potential S&P 500 inclusion, which would force index funds to buy in.
Private equity interest, too.
And the recurring rumor that they might spin off the legacy software business to create 2 separate, cleaner companies. Any of those could lead to a massive re-rating of the shares.
Okay, that's a huge list of potential upside. But with a stock like this, the risks are just as important. What's the bear case?
The first risk, and this one surprises people given the profitability, is liquidity. Their current ratio stands at 0.66.
And a current ratio of 0.66 is, well, that's quite low. What does that actually mean for the listener?
It means the company has less than $1 in liquid assets for every dollar in short-term liabilities. It signals really tight operational liquidity. Now, their strong cash flow mitigates the danger, but it's a friction point you have to monitor.
And that financial engineering we talked about earlier introduces the main risk for common shareholders.
Dilution.
It's a valid concern. Management has dramatically increased the number of authorized preferred shares. For the STRK class, it went from about 7 million to nearly 270 million.
Wow.
So if they issue those shares aggressively or on unfavorable terms, it eats away at the equity slice available to common shareholders. You have to watch it constantly.
And then there are the external factors, like the class action lawsuits.
Right. There are active lawsuits alleging the company understated the risks of its strategy, specifically around that $5.9 billion unrealized loss they booked earlier in the year. That just creates noise and negative sentiment. And finally, there's a key management change happening right at the end of the year.
Yes, the EVP and general counsel is retiring. That introduces succession risk at a really pivotal moment. This executive was central to navigating all those complex capital raises, so the market will be watching the replacement very closely. So when you put it all together, what does this mean for you, the investor?
Strategy offers a compelling sort of dual-pronged opportunity. In the near term, you have all those catalysts we mentioned. For the long term, you have this compounding structure, assuming the core thesis holds.
And I think here's the final takeaway. Strategy is fundamentally a high volatility, sophisticated investment. It's a calculated bet on management hitting that $150,000 Bitcoin target, which validates that incredible $80 EPS projection.
A bet supported by a real, profitable business underneath. Exactly. It has robust earnings and unique access to capital. But you have to have the stomach for the volatility, and you have to monitor the pace of that preferred share issuance. The question you need to ask yourself is, do you believe that target is achievable, and is the current price worth that highly leveraged risk?
That really is the ultimate question we leave you with.
We hope this analysis has given you the clarity needed to navigate this complex stock. Make sure you subscribe, like, and comment to keep up with all our daily stock analysis.